Hey everyone, so in the first video I discussed what accounting is and why it's useful to learn accounting. If you haven't already watched the first video yet, I recommend watching that before you move on to this lesson. There's an annotation to take you to that video. In this video we're going to be covering accounting standards and getting a brief overview of the conceptual framework of financial reporting. So as you might imagine, companies go through many transactions every single day. These transactions are also varied and could be accounted for in a variety of different ways. So this is where we start to see the need for accounting standards. It's very difficult to compare financial statements of two different companies if they use different accounting standards. In the US, public companies are required to produce financial statements in accordance with the generally accepted accounting principles, or GAAP. The Financial Accounting Standards Board, or FASB, is the group responsible for coming up with GAAP. There are other parties involved with the standard setting process, like the Securities and Exchange Commission, or the SEC, that mandates annual reports from public companies, but the most important takeaway is that the FASB is the body that produces US GAAP. Now what about international companies? The body that's responsible for producing accounting standards for international companies is the International Accounting Standards Board, or the IASB. The standards they produce are usually either called IGAAP or IFRS, which stands for International Financial Reporting Standards. For our purposes though, we're just going to be covering US GAAP. US GAAP and IFRS are largely the same, but there are differences. The FASB and the IASB are working together to create a singular GAAP to be used worldwide, but we're not quite there just yet. Now there is one distinction that I didn't make in the previous video that I'd like to go over now. There are basically two very broad categories of accounting. One is financial accounting, and the other is managerial accounting. Financial accounting deals primarily with financial reporting and producing financial statements. The users of financial accounting are mainly external groups like investors and creditors. Now there are internal users for financial accounting, but the focus is on the external users. On the other hand, managerial accounting deals with budgets and budget variances. Only internal management uses managerial accounting. It isn't seen or used by external parties at all. Obviously, this series is going to be covering financial accounting only, as it's not only the foundation for cost accounting, but it's also the most pervasive form of accounting. So the next thing I want to go over is the conceptual framework that's used to develop GAAP. The FASB doesn't just develop rules for accounting just for the sake of doing it without any other reason. They develop GAAP to achieve the objectives of financial reporting, which we discussed in this previous video. A big reason to develop the conceptual framework is so that there is a guide to reference once new problems emerge. So once the conceptual framework is established, the FASB comes in and develops GAAP to build on it. The conceptual framework is illustrated like this. There are basically three levels to the conceptual framework. The first level, which is on the bottom, deals with why. It covers goals and purposes of accounting. The third level deals with how. How the goals and purposes are implemented. Now the second middle level is basically the bridge between the first and third level. Now this is just a brief overview of the conceptual framework, so in the next video we're going to be drilling down into each level of the conceptual framework. As always, if you like this video, if you feel like it helped you out, be sure to subscribe, and if you have any questions, be sure to leave a comment. Until next time, take it easy.